No more talking. Hello.
Africa Mama.
So this is another edition of Let's Talk About Young Money. It used to be every Mondays, but because I wanted a full house, I decided to move it to Sunday. So stay tuned every Sunday by God's grace, 10 p.m. Eastern Standard Time. You're going to be seeing the three of us by God's grace on this show. Let's talk about your money. If you are meeting me for the first time, my name is Iyore. I'm a working mom and I'm also a home business coach. I believe that in these days of technology, that it is simple, not easy, but simple to build a business from home while working your job. And actually, I'm right now in my bedroom, and I know that Israel Yamu and Martins are also right now in their homes building their business. So, do you get scared talking about your money? When you hear the word money, do you get scared? If you
Well,
always,
we're
if
into
you
we're into
always,
the business of talking of money, so why should we
so
get scared?
if you're always getting scared of talking about money, then there's a problem somewhere.
Sure.
And to get comfortable talking about your money. So today, like I said, it's a maiden edition for every Sunday. And to kick it off, I have two gentlemen here, my financial educators. They are based in Canada. I am based in New York. We're going to be answering the public. We're going to be answering questions concerning your money. So if you have any question that is bugging you right now concerning your money, just put them in the comment section. And I can assure you, Mr. Israel and Mr. Martins will have answers for you. And also, if you feel you don't understand money and you want to understand how money works, there is a free educational platform that you can get logged into, that we can introduce you to, and you can begin to understand how money works for free. So, also, if you're open to understanding how money works, just say me or how money works, or I am open to learning how money works. Say all that in the comment section, and we will definitely point you in the direction where you can learn how to be financially literate for free. So today, like I said, we're going to be answering the public questions that are bugging the minds of our audience. That is what we're going to be doing. So if you have any questions bugging your mind about money, how to save, how to make money, how to invest your money, how to protect your money, just put them in the comment section, and every Sunday will come with answers. So, Mr. Israel, how much does life insurance cost per month on the average?
Well, that's a very good question, but there's no uh, particular answer to that because the cost of life insurance is based on several factors, right? So if someone actually needs a life insurance, um, there are there are indices we look at to be able to speak to how much the life insurance will cost. For example, sex is a factor. Um, from experience, is the for a female or a female with the same age with a male, it tends to be lower in cost. Uh, you also check the health status of whoever you are is going to take the insurance. Um, they can also be you can also check the coverage, the amount of coverage. So someone that wants to cover for $100,000 and someone that is covering for $1 million definitely are not going to get the same cost of insurance. So those are some of the factors that determine what the cost of insurance will be. So once you want to determine that, also we look at the type of insurance. Also, is it a temporary insurance or is it a permanent insurance? For a temporary insurance, they have different uh, term insurance. Some can be 1 year term, or 5 years, or 10 years, or 15 years, or 20 years, or 30 years, as the case may be. The cost will definitely be different in those age group. Then if you are doing a permanent insurance, which has cash value, which has a large part of it, like about 75 or 80% of it is invested for the client, definitely the cost of that insurance is different. So it all depends. So what we do as financial advisors is educators is that first of all we look at what is the what how much is the person qualified to take as a coverage. We first of all look at the financial need analysis of the client. Then we can say we can recommend this is what is adequate for you. And it depends on whether the person is a single, if he's married, he has families, he has a house. So we look at the financial. So after we do that, it now depends on how much the person can afford. So whatever the client can afford, the affordability, because I mean, if you're taking a life insurance, the client should be able to pay the premium, the monthly premium, as the case may be. So everything has to do with affordability. So once we made a client, we look at the total financial situation of the client. That's where we are able to fashion how much the cost of insurance would be for that client. I don't know if Martins Wanuku would like to add to that. So basically, that's how we determine cost of insurance.
Yeah, it's as easy as that, as what you have described it in a very simple term. You can get a $500,000 life insurance for as low as $1 a day, depending on your age and depending on your sex. So you can get a life insurance, especially a term insurance, for as low as $1 a day, depending on your age and depending on your sex.
Thank you
So I
so
think
much.
that's
Thank
he
you.
has added, I mean, the affordability
That
aspect of
is,
it.
yes, that is what a tired, busy, stressed out working mom wants to know. Because she wants to know that, do I have to be rich to have life insurance? So now you have made, in fact, it's like this is a light bulb moment for me. So, oh, that means that working mom out there that earns $15 an hour can actually have a life insurance. You
Sure.
see, that is the essence of this video, of this interview, talking about let's talk about your money. That is a very important point you just made right now for my listener. Thank you so much, Mr. Martins. Now, Mr. Martins, your question: is it worth paying for life insurance? Is it worth paying for life insurance?
Yeah, obviously, because it's worth it. Life insurance is a very good instrument for families. You know, the interesting thing is that most people deal with helping organizations, but we are dealing with helping individual families. So imagine that I give myself as an example. Imagine that I pass on today. I have 4 children. I have a wife. What will be left of my family? We have a home. We have a mortgage. So the obvious thing is that uh, being the breadwinner of my family, it obviously means that my family is likely going to pack into an apartment. That's just the obvious thing. They are going back to apartment because the bank is going to go ask them for their money. And if they ask for their money, if I had a life insurance before passing on, obviously that amount will pay my mortgage. But if I don't have, it is a very serious thing. My family is going to go back. And you want to look at it again. If I am not there, obviously I have children and they need to go to school. It's a problem there. And you know, I see today many working mom and even working dads living paycheck to paycheck, and they have nothing there that is safe for the future. So in that situation, we need a coverage, a life insurance coverage that can help us to be able to finance our family when we are no longer there. And you know that what people do now is that they do what they call GoFundMe or Committee of Friends. So Committee of Friends and GoFundMe are not substitute to life insurance. They can never substitute life insurance. So life insurance, every dollar you pay for life insurance is worth it. Why I am here right now, I am able to provide for my family. And I pay a small money, like I just said, $1 a day can pay for a life insurance for about 1,500,000, 500,000 to 1 million. And for $1 a day, that is actually $30 in a month. That can take care of my family if I am not there. Right now, I'm taking care of them, but if I'm not there, insurance take start from where I stop. So insurance is a very good tool. It is not just for death; it is also for my retirement. You have life insurance that can provide you an opportunity to have cash surrender value where you can have access to that upon retirement and use it to finance your retirement. So some people are scared of life insurance in terms of death only, but I can tell you it goes beyond death only. You can also have value for your money in terms of retirement when you do life insurance. So that is it. Life insurance is very, very valuable. Every money you pay for life insurance is worth it. Thank you.
Thank you so much. Mr. Israel, what are the three types of life insurance?
Yeah, yeah, just like just taking a cue from what my friend here Martin just said. He mentioned some items, and there are two major types of life insurance: the temporary and the permanent. Then the permanent is further divided into two major, which is the whole life and the universal life. So those are the types of life insurance. If you want me to break it down a little bit, then I can maybe mention some of the features of. So if you want to say the three main types or the two main broad type is the term insurance, the temporary one, which has expiry dates. Then for the permanent, you have the whole life, and you also have the universal life.
Okay, so the next question will explain that. So, Mr. Martins, what is the best policy?
The best life insurance to buy is depending on what you need life insurance to do for you. That is the best life insurance you need to buy. So there is no one best life insurance. It all depends on what you actually need insurance to do for you. Let's take, for example, I bought a car and I bought a car for a loan of $70,000. And it's for a duration, I'm going to pay the loan for 10 years. So the best life insurance for that purpose is a term 10 life insurance. So if I have a mortgage and the mortgage I'm going to pay down for 20 years, the best life insurance for that mortgage is term insurance for 20 years. It is affordable, very, very affordable, and it lasts for 20 years. It covers you while you are owning that house and while you are alive. And then you have that even when you didn't die within the 20 years, you can also extend it into another 20 years or another 10 years, or you can change it to a permanent insurance. But if somebody is looking at some needs that has to do with permanent needs, for example, you are looking for insurance for a purpose of paying your taxation, because when anyone dies, you are incurred in Canada and in the US, you pay more tax at death anyway. So if when anyone dies, you have to pay tax. So you will need a permanent insurance. Like Israel rightly said, you will either need a whole life or a universal life that will last till death, right? And if you're looking for insurance also for final expense, you will need a whole life or a universal life. And if you're looking for insurance, like, like my university, I went to University of Benin back in my country. I would like to donate something for them at some point, or the secondary school I went to, or primary school I went to. I will need permanent insurance that will help me for that, and so many other things that you need to think of, like a legacy. I want to leave a legacy for my family. I need life insurance. And actually, one thing I can say is that life insurance is the best way to transfer wealth to your children. Is the most cost effective way to tax efficient way to transfer wealth to your children, because benefit you get from life insurance is tax free. You can imagine $1 million without tax versus $1 million with tax at a marginal tax rate of 50%. That is a whole lot of money. So it's a very good way to save on tax. Thank you.
Absolutely.
So if you just up the way to the next question. Sorry. You just opened up the way to the next question. So, Mr. Ishve, are life insurance proceeds taxable? Are life insurance proceeds taxable?
Yeah, Martin he just touched on it, and why the emphasis of the importance of life insurance cannot be overemphasized. Like he said, for a permanent insurance, if you are looking at tax purposes, a permanent insurance is the best type of insurance in that regard, right? So if you have coverage of 1 million and you're thinking of passing it to your family, it's not tax. So there's a tax efficiency there. It goes from you to your spouse or your children tax free. Government doesn't tax a single dime. But if you have a savings, let's assume you're able to accumulate that same amount of money somewhere, or like people talk about property, for example, at death, passing that property to the next person can be very expensive in terms of taxation, right? So people need to think not just the now, just to think of the future. In fact, there are a lot of families who have lost the house that they cherish so much. There's so much emotional attachment to that property just because of the issue of tax. When the breadwinner, the person that owns the house, died, passing it to the family, children cannot pay the tax. Marginal tax ratio of 50%, you know what that means. So I think he has explained that aspect. Maybe Martins want to throw more light to that.
Yeah, tax is a big deal in Canada and in the US. In the US.
Not America generally.
Yeah, and one thing that there are two things that are certain in North America. It is debt and tax. That are inevitable. There is no way you can run away from it. But managing tax efficiency is very, very key in what we are doing. There is a group of people, they call them the Jews. They buy universal life. And when they buy, they don't just buy 500, they buy like 1 million, 1.2 million, 3 million, 4 million. And they pass the entire 1 million, 2 million to their generation. And that is a whole lot. That is a whole lot of benefit for them, right? They're passing this money to their generation. And as they are buying the insurance, they are buying for their children and they are buying for their grandchildren. And so you see a generational wealth transfer without paying tax to government, right? And government actually encourage people, especially in universal life, to do tax, to how much you can put into a universal life without taxation. So it is a very good opportunity to really pass wealth to your family without taxation.
That's why they're able to establish a lot of big businesses.
Yeah, so you can imagine, let's imagine that my father passed on 1 million or 2 million to me. I mean, putting that money in investment, it will eat a whole lot of money without me having to work. My money will work for me. But we are immigrants coming to this country. We really need to wise up so that we
So
can
get it
catch
right.
up with these people.
Wow. So this is 20 minutes. I know we can. I know I have capable. I know I have capable hands that can talk about issues 1 hour, 2 hours, but human beings have a very short attention span. So I will leave it here. And we are going to continue again by God's grace next week, Sunday. So if you have questions bothering your mind about your money, how to make money, how to save your money, how to invest your money, how to protect your money, have any questions, just put them in the comment section. And next week, Sunday, by God's grace, we will definitely answer them. And if you're there right now and you believe that, yes, you need to really understand how your money works, you want to be financially literate, there is a free educational platform where you can do that. So just let me know in the comment section that, hey, you want to learn how, you want to understand how your money works so that you can pass on generation wealth. Just put it in the comment section and I will definitely send you in the right direction. Thank you so much for watching and join us again next week, Sunday, 10 p.m. Eastern Standard Time for another edition of Let's Talk About Your Money. Thank you for watching and bye for now.
Bye. Africa Mama.
Bye.